the only way to get DeFi to mainstream is by building experiences that feel like fintech. So abstracting away wallets, gas fees, networks, and being able to link your bank account into Aave app and deposit in a few seconds is the experience that passes the sort of fintech test.
It feels like a unification of labs and DAO. And through the proposal, there's several points that I think we want to get into. One of them is that, Aave Labs is making an ask.
And it just kind of shows, Stani, that the future of these token markets are going to start to look a lot more like public equities, right? Quarterly earnings calls, quarterly reports, investor relations, capital markets teams.
Welcome back to the Rollup. I'm Robbie.
I'm Andy. Robbie and I met at the University of Florida in 2017, where we first found out about digital assets.
We learned a lot along the way, and we're bringing you face to face with the leaders of our industry.
Sit back, relax, and enjoy today's episode. Stani, welcome back to the show, man. Good to see you. Big week.
Good to see you, everyone, and happy Friday.
Happy Friday, man. Congrats on the proposal. Aave will win.
Thank you. It's I think it's interesting times in DeFi at the moment, and also for Aave and also Aave Labs as a team, but also where the whole ecosystem is going, and the potential of Aave and DeFi for the future. I think we're gonna probably talk about it a little bit more.
Yes.
Yeah, I think just some context setting, right, Stani? We've kind of been going through this kind of sophistication and maturation phase of the industry broadly, right? And I think there's certain token designs that were prohibited due to regulatory, regimes previously. I talked about imagine seeing Andre Cronje's valueless governance token medium article be written today as a new token structure, right? And we talked about returning to fundamentals. We talked about this idea of the revenue meta, which is kind of a meme, but it also works in terms of like, oh, this is where the space is going towards cash flowing tokens, towards this new idea of actually unifying token and equity. Why don't you just break down the Aave Labs proposal, Aave Will Win, to the DAO, and why this matters for Aave's next phase of growth?
Yeah, no, I agree kind of on the landscape of the tokens is a very interesting inflection point, and the Aave Will Win proposal is that has been for us a way sort of to try to think about like how does the token value capture work. And there's obviously, like when you go all the way back to the early days, the project itself was funded by an ICO back in 2017 when we were ETHLand at that time, and very experimental project, one of the first would say DeFi protocols, first lending protocol at that point, and more of like a peer-to-peer model. And at that point, the idea of token economics, token value capture, and whole DeFi space was completely different. And obviously, over the years, things have been evolved quite concretely. But when we think about at that point when things started off for ETHLand, our sort of a main idea was that how do we actually are able to build this sort of infrastructure that could be connected to any sort of a use case in lending, and down the line could become a backbone for financial systems, and the same way as, for example, the internet protocols like IP and HTTP are servicing everyone, and be as little as opinionated as possible. So effectively, everything started with experimentation, and Aave Labs back then, as the ETHLand team, we were the contributors of this systems. And over the years, obviously 2020 came, we launched the first version of the Aave protocol, which was fundamentally very different than what we did in the past. And then followed DeFi, and that 2020 year was fundamentally important for us, not just because the protocol itself started to get traction, protocol market fit, but because that was when a lot of these initial sort of governance functionalities started to be built into the system. So at that point, AIP1 was something that we released, and AIP1 also defined effectively what the token governance is for the Aave protocol. What does it do? What's the purpose? And also, what is the value capture of the protocol? And it stated effectively that any sort of protocol revenue that revenue that is created, the protocol takes a portion of that revenue into the DAO treasury, and then the DAO treasury can be used to fund different sort of initiatives, whether that's further development of the protocol, further research as well, or paying for service providers such as, for example, risk management and other services that effectively add value into the protocol. So it kind of like that opened the doors for the community to come and contribute. And that year also is when the DeFi summer was peaking. So you had this interesting yields on chain at the same time when it was COVID, interest rates were low everywhere in the traditional world, and then you had these governance tokens on top of it, that protocols were giving for users ability to own these pieces of infrastructure. So coming out of there, and over time, obviously, Labs has been a fundamentally important participant and kind of permanent contributor in the Aave ecosystem, building some of the infrastructure from like the Go stablecoin, Aave V4, and so forth. But one sort of big thing for us as a big kind of a pushback has been always the regulatory uncertainty. And over the past few years, I think it's been extremely hard to be a DeFi builder, whether it's someone who is in the US or in Europe or anywhere, any part of the world. And we were experiencing years of risk that came out of that uncertainty and aggressive policies by the SEC to pretty much almost every single DeFi protocol that was out there. And that sort of pushed a lot of the innovation back and a lot of the adoption back. And I feel like that also affected the whole growth of DeFi. So if you look at the existing growth phase where DeFi is today, let's say it's in total 120 billion. Last year peaked at 220 or so billion, and going a few years back, it was 200 billion. A lot of that sort of limitations came from the fact that it was extremely risky for a lot of DeFi teams to actually contribute and push the innovation and push the growth further. And the Aave Will Win proposal effectively establishes a really, really important part of the whole story is that the labs, the labs as a contributor builds products and wants to be self-sustainable and wants to create a product layer that then acquires users and then increases the economical activity of the Aave protocol. And one of the things that has been really challenging is to understand that, well, where does the value capture go? Does it go into the Aave token or the Aave Labs in form of equity? And the second question is that, so when you get funding, let's say into the labs to basically grow these products and compete with the biggest fintechs in the world, and grow the protocol at the same time, where kind of like the focus is going to go and how to ensure that everyone who is contributing growing the protocol are thinking and focusing on the Aave token and being token-centric. And going back and forth, and there's a lot of discussions in the past months about this topic, and DeFi, in general, DeFi protocols and DeFi teams had to rethink about how to think about token value capture and token economics, and how to go away of this model of like, these are just governance tokens, valueless tokens, but actually these are fundamentally important businesses that are being built now and could be empowering the whole financial infrastructure over a long-term period. And how do we basically ensure that that is very clear? And that's where the Aave Will Win proposal comes into place, where we from Aave Labs, we want to show a extremely strong commitment, but also alignment with the Aave token holders, and ensure that the work that we are doing is seen going as a value capture at 100% rate on anything that's basically we're building on the product layer directly into the DAO. So it takes the AIP1, which basically gives a mandate that the protocol generates revenue, and that revenue goes into the Aave DAO treasury, into also that products that are being built, let's say outside of the protocol by Aave Labs, 100% of that revenue is going to the Aave DAO treasury. And that is fundamentally a big thing, because it unlocks a completely new streams, not just a one stream, but streams of revenue outside of the lending business model into new sorts of business models, and also on the product layer. And that is a big benefit for what this proposal actually does for the Aave as a ecosystem.
YEET is built for big moments, the most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
I think that traces through the entire history leading from AIP1 all the way through to Aave Will Win, which has transcended several eras of DeFi. And we were also early contributors of DeFi. You may not remember, Aave Grants was actually the first dollar that the Rollup made way back in 2021, I think, for doing DeFi education. And so, we've kind of grown as Aave's grown and as the space has grown. And I think there was a tremendous effort to decentralize early on. Could have been due to regulatory. There was also a strong belief that decentralized governance was the right path to organize a community working on an underlying protocol layer. And we were fighting forces of centralization and intermediaries. There was a lot of things that happened in the middle, which you explained in AIP1. And now we find ourselves at a point in time where we're seeing the decentralization that spread a lot of people and things out and diffused all of this operationally. We're seeing a lot of it consolidate and come back. And here at the Rollup, we've been talking about this unification. And that's really what the proposal feels like. It feels like a unification of labs and DAO. And through the proposal, there's several points that I think we want to get into. One of them is that, Aave Labs is making an ask. I believe the ask is, I want to make sure that we get this right, but it is for a certain amount of USDC and a certain amount of Aave. And so, if the DAO is to, commit to this ask and provide this USDC and this Aave to Aave Labs in exchange for 100% of the revenue generated via the protocol and some of the other products from Aave, it almost feels like, the DAO is kind of buying out the labs. And so could you unpack is this the right way to think about this? It's this exchange of money now for money later. And, if we get into the numbers here, I believe the revenue that we saw in the thread that Aave posted was upwards of $100 million throughout all of, I believe it's per year throughout all of these Aave products. The cash and Aave that the labs entity is asking for, 75,000 Aave at these prices, roughly $8 to $10 million. It's a significant portion of the DAO's Aave holdings. And then there's USDC, of which the Aave DAO holds $161 million. And it's asking for the Aave Labs is asking for $42.5 million of stable coins, 25 million in primary, 17.5 million in milestone grants. And so this is a substantial ask, but it seems as if the Aave DAO would recoup this investment in a short amount of time, perhaps even 1 year or less. Is that the right way to think about this proposal? And can you just verify this math that, you know, this investment that the DAO makes in labs would get recouped in a year or two?
Yeah, there's of course there's different stable coins. Not everything is in the USDC, so there's different proportions of that and assets, and typically stable coins in the treasury are also earning as well. And something to think about is that when it comes to the Aave treasury, effectively, it's not a static treasury like in many of these DAOs. So throughout the years, over the past 8 years, we've been able to effectively build a protocol and an infrastructure, both Aave and Aave native Go stablecoin, into a place where it's revenue generating. Very few DAOs and very few protocols are in the same state as for example Aave's, but fundamentally that means there's ongoing revenue. There's one important part of that is that the protocol has usage and it has users, and that is something that the Aave Labs' developed product layer is supporting and driving that traffic and experience and so forth. And the way we think about it is that our original approach was that maybe actually the products of the Aave Labs can actually be self-sustained and developed outside of the protocol. And that's a way to effectively grow the products, fundraise, and really compete on user acquisition at the same level as, for example, a lot of these fintechs are doing. But at the same time, you get this sort of same problem of value capture, which is fundamentally in a place where you have to think about is the value going, for example, into the equity or into the token. And the way to solve this is kind of like an interesting and a little bit similar model as Uniswap unification proposal. So there's some ingredients there, but a bit different model is applied here. So in Uniswap unification proposal, they are foregoing all the application fees to basically drive traffic into the protocol and also monetize on the protocol level. In the Aave Will Win proposal, the trade effectively here is that the protocol itself is earning, and the protocol is creating revenue, and with good treasury management, that revenue is managed well and treasury is managed well. But at the same time, as Aave Labs is building these products, it generates additional revenue. And then the idea here is that that additional revenue is now at 100% rate directed to the Aave DAO treasury. So that effectively means that as the products are growing, which is effectively Aave App, and Aave App is our new offering that is fully tailored to consumers, because we believe that the only way to get DeFi to mainstream is by building experiences that feel like fintech. So abstracting away wallets, gas fees, networks, and being able to link your bank account into Aave App and deposit in a few seconds is the experience that passes the sort of fintech test. Then obviously there is Aave Pro, which is about the sophisticated DeFi experience, but also close connectivity to banking, so you can pull funds in, additional security on the wallet management, and you can connect your own wallets. And the third product is the Aave Kit, which is more on the API SDK level, enabling integrations of the Aave protocol in a safe and secure enterprise-grade level for example, fintechs and traditional institutions. Then there's obviously the Horizon market, which is a RWA play that we think is going to grow substantially. So the way to think about it is that these products will effectively grow the revenue for Aave because we grow the user bases, user activities, and that grows the economical activity for the protocol, going directly to the consumers, servicing sophisticated DeFi users, and then enterprise sales for fintechs. And by foregoing the revenue of these products that could be as big as any sort of fintech in the future, the trade here is effectively that the Aave DAO funds a budget annually for Aave Labs, not just build and maintain these products at an extremely high quality, but also to grow these products and invest into customer acquisition. So the way to think about here is that the DAO effectively is investing into protocol innovation, R&D, and product innovation and product growth, and that expands the revenue capture surface and also the velocity of revenue over the upcoming years. And fundamentally, what we're saying is that Aave Labs will keep building for-profit products and expand the profit surface, but all the profit is going to go to one place, which is the Aave token. And by doing that, that creates that removes the uncertainty between value capture, and that makes things more simple for anyone who are thinking about the Aave token or thinking about how the relationship with the labs and the protocol, the DAO, and the token holders is structured. And I think that's a really good model because what I'm very excited about is also to look into the traditional public markets and think about what kind of things we can bring from there to actually make tokens that are running incredibly potential businesses on chain, and how to improve those governance mechanisms for the token holders. And I think that is a really interesting topic as well.
Yeah, I mean, I think the industry wants tokens with clear value accrual mechanisms, undeniably. I also think that this proposal from the more institutional folks that I've just spoken to about it in the last 24 hours makes the token much more investable from an institutional standpoint, which I think is very important. And it just kind of shows, Stani, that the future of these token markets are going to start to look a lot more like public equities, right? Quarterly earnings calls, quarterly reports, investor relations, capital markets teams, one-to-one engagement with large holders, more top-down hierarchical decision-making on product as a competitive advantage. Just this different regime is enabling a different structure. So you've talked about kind of how this proposal will allow you to go and compete with some of the largest fintech applications with your full product suite. You also talked about the continued funding, development, and execution from the lab side. I'm curious how Aave V4 pertains to this, right? Why this is such a central part of the proposal, and what V4 unlocks from the Aave perspective as it pertains to, the token being the central part, a token-centric future. Why V4 creates a interesting dynamic for the token.
No, you're absolutely right. Also, in the sense that the best execution environment for ideas and businesses is typically startups and scale-ups, where you have very little friction, you can move really fast, and that type of an environment is where the products should be. So decentralized governance works really well when you want to add resiliency, additional accountability, and transparency, and that's where basically in Aave protocol's case, you have this system where every sort of a parameter that goes into the protocol asset listing has a pre-vetted process, and that ensures that end to end the protocol is safe and secure. And that's why Aave as a protocol is a leader, because the risk is managed really well and there's checks and balances. When it comes to the product layer, you can't really use decentralized governance, voting, and for example, what kind of features should be voted into an application, or what kind of things should be on a landing page and whatnot. You have to operate in a sort of autonomy, product autonomy, and people who build the best products in the world, and now and in the past, and if you think about like Steve Jobs and a lot of these icons, they have a lot of product autonomy. So there needs to be this sort of independent decision making of how and what needs to be built on the application layer, and iterate quickly and take risks. So one of the things that I'm really a big fan of is that we never know what sort of initiative or a product or a feature actually is going to be a groundbreaking feature. So for example, when we were developing the Aave V3, we added one interesting feature, which is called E mode. So it's sort of efficiency modes where you could get a really high loan to value ratio between assets that are correlated, and that works really well for users that are looping these assets. And that created a lot of net deposits for the Aave protocol. But when we were brainstorming about this feature and implemented it, we didn't understand exactly the impact. And it turns out it was a really good impact. And some features have less impact, but the main point is that you never know beforehand, so you have to keep innovating and iterating. And Aave V4 follows the same sort of innovation pattern that we've done almost the past decade, where we build things, but we build in a way, in a structure where we can actually add new products and features and test them out. So V4 is kind of like a combination of the best of the both worlds. So we have what V3 exactly does really well at the moment, but also adding a sort of modular architecture with the hubs and spokes, where hubs are where the liquidity is concentrated, and spokes are borrowing configurations where the hubs are giving credit lines to those spokes. And spokes can be any sort of even custom implementation. So what it really enables is that you get the same sort of Aave experience as you get today, but you can bootstrap really quickly new collaterals and use cases with proper risk management by giving new credit lines from the hub. And I think Aave V4 is something that is going to be a game changer as a sort of a baseline. But what I'm even more interested in is that if you look at DeFi today, and we're sitting at 120 billion TVL mark as an example, and peaked at 200, and a few years ago it was at a 200 billion peak. What that really tells us is that DeFi has been able to prove itself really well through resiliency. On 10 of 10 of last year, we liquidated over 200 million worth of collateral in the time frame of minutes, and we liquidated over a week ago $500 million worth of collateral in a period of a week. So these crypto assets and lending against Bitcoin and Ethereum has proven sort of resiliency. So if you can use this type of infrastructure for the most sort of dynamic assets, that means that you kind of like have battle tested the infrastructure. And with Aave V4, we can actually keep expanding that use case. So whenever there's interesting native primitives that are coming into from any part of DeFi, we're able to iterate quickly, onboard them without taking excessive risk. And at the same time, we know that we need to bring all the value into on-chain. And then that comes from tokenization, which can be supported with Aave V4, but also in the future, the lending, for example, might not have any sort of a tokenization, but you need to have some sort of a custom adapters to adapt to that use case. So that's where the modular model really plays a very significant role. So I'm very bullish on expanding Aave into lending against traditional assets, like what we're doing with Horizon, lending against RWAs. But also, I think that if you look at where things are going over the next sort of decades, we have AI, we basically have almost unlimited amount of intelligence at anyone's disposal. We're going to have extremely cheap energy from solar. We're going to have batteries. We're going to have robotics. We're going to have a lot of resources around everyone that really makes labor abundant, intelligence abundant, energy abundant, and really kind of like creates this sort of new world. And getting towards that transition, we need financing, right? So if you look at the next maybe 50 years, if we are able to use Aave as a protocol to finance sort of the future, maybe we will grow it, bring it faster by 10, 20, 30 years. And that is, for me personally, more interesting than tokenizing anything that can be already traded in a traditional exchange or mortgages and so forth, because that is basically the future we want to bet on. And for Aave's vision going for the next decades, we want to have a future-proof vision where a lot of the collateral is coming from basically these types of high-quality yield sources, and that can be distributed through the Aave app, the Aave Pro, the Aave Kit, all the way to the whole user bases. So there's a lot of connecting dots between the product layer, Aave V4, and there's going to be a lot of quick wins. But the long-term horizon here is that Aave should be used effectively to finance the whole kind of a global transition into this new world where we're starting to head towards.
Looking for yield that stands out? inFiniFi gives you just that. Deposit stablecoins and earn far more than the current savings rate. inFiniFi is a battle-tested, reliable DeFi platform that is ready to go. Head to infinifi.xyz.
Hibachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today. Stani, and I think you make a really important point. We've seen decentralized organizations become ossified, for better or worse, in the past, right? You look at Bitcoin, it's effectively ossified. You look at Ethereum, it operates on, timelines that are very, very long. Lending is still a very active and hyper innovative segment of this industry, and Aave has the chance to do something really, really special. The way you put it is essentially finance the future. And I think there's an incredibly powerful effect that this could have on not just the Aave ecosystem, but DeFi and finance at large. If we can effectively bring these tokenized assets on chain and extend credit on these assets, and Aave is rising through the ranks as one of the top banks in the world, and this is the job of banks, is to finance the future. Aave has the chance to extend credit and create a wealth effect for high quality assets in exogenous sources of yield. And this is a really, really special opportunity and time in the market.
Yeah, I also think that the margin really comes from like not being, I think like the businesses that are run on sort of like bringing full access run on a very thin margins. Let's say like if you have a brokerage that allows any access to trading any stock, for example, or any fund investment and so forth. If you're a lending protocol and you just enable any sort of assets and lend the trust that you basically create within the audiences, I think that form of a accessibility business have a very low margins. And I think where the margins are higher and the mode is more defensive is actually when you have a bit more opinionated or quite an opinionated take on what sort of assets should be tokenized, listed as a collateral, borrowed against, and what is the composition of the yield. So the way I think about it is that the business models, whether it's on chain or off chain, that just purely like provide any sort of access, can be outcompeted really quickly with the right incentives, the right amount of funding, product execution, and that competition is fierce for very thin margins, and that creates a very, very thin value layer. But basically, a setup where you have a really opinionated take on what are the best financial opportunities in the future, have high quality yield and high quality user bases, you end up in a place where you actually have a lot of defensibility, and that translates into the branding, and that allows also to capture additional revenue. That is why the Aave app, Aave Pro, and Aave Kit are extremely important for the Aave DAO. Is not because it only allows to ensure distribution, whether it's consumers, fintechs, and institutions, existing DeFi users, but it allows to actually build upon that margin and add upsell to the users and build better products, and also products and features where you can move faster and monetize faster, because protocol development is of course moving much slower pace.
Right.
And that is kind of like a why this setup where not only the protocol layer but the product layer is bringing additional revenue streams into the Aave DAO is such a powerful example, and focusing on really good products itself is really important. And I think in DeFi we kind of lack on the idea of building extremely good products and distribution, and we are trying to sell all this sort of infrastructure to each other and fintechs, but in reality a lot of those sort of integrations will get commoditized. So that is why the sovereign sort of a product layer is important for Aave.
Right.
And that kind of explains there then why this protocol includes brand governance, right? I mean, maybe you could talk a bit about that, the Aave brand, and why you feel formal stewardship of the brand at this current stage is so important.
Yeah, I think it's really important because in the past, for example, Aave Labs and Aave DAO and Aave token holders, they effectively share a brand services. And I think when we have a setup where basically any usage of the brand or branded products, the revenue goes to the Aave DAO, that creates a sort of revenue and product alignment. But more importantly is that we want to ensure that even if Aave Labs will exist, for example, in the future, that the brand is protected in any sort of for any sort of outcome. And that is why it was important for us to put into the same proposal. And that brand is also used for growing the Aave products on the product layer, growing Aave V4, and also the reason why we have all these elements in the same proposal, because they're all interconnected. So Aave V4 enables a lot of these revenue streams. The branding is used to grow the product layer, and also that sort of reason is basically there. So I think in overall, this proposal should set a extremely strong foundation on how we, from Aave Labs' perspective, are working as part of the DAO. So Aave Labs is part of the DAO, but working towards like a one direction and one goal. So it highlights the importance of being token-centric and sending that signal to everyone. And that's just the baseline. And then the next steps is thinking of upcoming years of like how we get to the next sort of improvements that we can do, like how do we add more transparency, protection, and those kind of things that already exist in the traditional capital markets, but taking the good parts and leaving the bad parts out and applying them in token-centric world. Because I truly hate the narrative of like tokens are worthless, because they do control an extremely important infrastructure, but this infrastructure is not going to be that valuable if we don't go beyond these existing crypto assets. If you want to trade all the value in the world, you need to go beyond the crypto value. You need to go into any value that is basically a potential target.
Yeah, and you Stani, you speak about the product layer, the protocol layer, and the brand governance. All of these are reinforcing one another. Another part of this proposal is the curation of a foundation, an independent foundation that would hold the Aave IP and the trademarks and some of the branding rights. How will the independence of this foundation be assured to the Aave DAO and Aave Labs? What do you see for the structure of this foundation? Maybe who do you see should be on a board for this foundation? And if there is a disagreement, between Aave Labs and Aave DAO, how do you ensure that this foundation makes the correct decision on behalf of Aave as a whole?
Yeah, the independence is the key there element, and I think independence is something that is established also in traditional boards, and there is different ways to do that, and obviously like Aave Labs is part of Aave DAO. It's sort of a permanent contributor into the Aave protocol. We get paid for doing certain things like building the Aave v4 and previous versions, and have some sort of also marketing budgets in the past, and here it's more about consolidation and basically going effectively for a growth mode from a startup mode. And of course, in DAOs, there's always various different opinions, and the strongest voices don't really actually own the DAO, and that's also like the beauty, whether it's like Labs or someone else, and that doesn't really that is the beauty of actually DAOs, is that anyone can have their voice and opinion, but what truly matters is what is on chain and what basically decisions are made. And it works in the same way in running these traditional businesses as well. End of the day, decisions needs to be made when it comes to execution. In regards to the actual foundation, there needs to be just purely independence from any party, including Labs and everyone else.
Donnie, just a couple more things. Just coming back, just to finalize and crystallize the economic structure here. Could you just give the audience a quick run through as to how directing 100% of the revenue from Aave Labs built products will change the existing economics of Aave? I think a lot of fundamental analysis are really excited about a lot of protocols and tokens that are redirecting capital back on a programmatic, consistent basis. Maybe you could just talk through like what your current model is, and then what you expect the changes to be in the economics in the flywheel as a whole, if this goes through.
Yeah, the existing model is sort of quite simple, and what we established back in 2020 with the IP1, which is simple, that borrowing revenue comes into the protocol, and portion of that is taken into the Aave DAO. And then that's sort of like one business model where users supply stable coins and they're borrowed, and that generates interest. There's also the Aave native Go stablecoin, which is sort of a second line of business, where the Aave protocol itself operates takes a margin of the lending. In Go lending, in the most cases, and in the Aave core market, there's, for example, 100% of margin that goes into Aave DAO, because there's on the borrowing side, because there is no LPs, as technically the Aave as a protocol is the LP there. And what basically happens with the Aave Will Win proposal is that in some ways a third business line is created. And this third business line is anything that is created on the product layer by Aave Labs. So that can be, for example, the existing swap fees that has nothing sort of hasn't had any relation to the protocol, but are simply swaps on these user interfaces, and also position swaps. So if a user wants to swap one asset that they have as a collateral to another one, or swap one debt position to another one, they generate fees, and those fees go into the Aave DAO, and it's about 10 million in fees annualized that is going to the DAO, but also any sort of revenue streams we might add even further with new products, new launches, and something, for example, we're working now in the Aave app is a Aave card. So, for example, any sort of a time a Aave user is swiping their card, a portion of that card swipe is going to go to the Aave DAO. I think it's quite cool because it's a very sort of a rare model where you think you are doing as a customer of chain, and you're generating revenue that goes all the way to on-chain that benefits token holders. So fundamentally, it allows labs basically build products in autonomy, add monetization features, as long as they go directly at 100% into the DAO. And I think that is really, really powerful, because on a product layer, we can move faster and we can increase monetizations faster. And obviously, Aave V4 on the protocol layer expands some of these revenue features. For example, we have a reinvestment feature that we added in the Aave V4 protocol. So when the rates on Aave are lower than the risk-free rates, the float, part of the float of the pools, can be reinvested into treasuries or on-chain sort of risk-free products like ASCO and these types of products, and that generates more revenue. And then with the spokes, you can add additional use cases, and those can range of using LP positions as a collateral to lend, go against at 100% margin, or for example, borrowing, lending funds into qualified custodians where Bitcoin and Ethereum is used as a collateral to borrow. So this sort of OTC business is still growing outside of DeFi, and this enables that revenue stream to go back to DeFi. So there's certain elements on Aave V4 which expands this revenue layer on the protocol side. But for me, the most exciting thing is that now we actually have outside of protocol revenue features on whatever the users might be doing. So it's going to be really interesting a couple of years to think about what do we add into the app to build more revenue.
Yeah. Stani, last thing for you, what happens next if the DAO ratifies this framework, and what can the community as token holders expect in terms of follow-ups? Kind of what can we expect to come next?
Yeah, upon ratification, the proposal, there's obviously continuous development of there's Aave V4 launch that is coming, so that is going to be a big thing. There's going to be a follow-up ratification on the parameters for Aave V4, and also on a continuous basis, Aave Labs is sharing in form of accountability reports and continuous reports to the Aave community. So one of the things we want to ensure that there is a high degree of transparency and accountability, and I think it's very easy to do because all the focus is on the token-centric model, which simply is easy to point where we have to grow, where the growth is going, and what do we need to do to achieve that growth. And obviously, the vision is something that takes a few years to actually develop. But a lot of these product launches are happening very soon. And we're very excited to bring DeFi to millions of users and also get Aave integrated into one of the biggest fintechs. And also still not forgetting the sort of, the sophisticated DeFi users like myself, for example, and providing them the best experience. So we have to innovate quite a lot, and there's a lot of competition, but also we're going to see a lot of competition coming from fintechs. They're way more better funded, but we have the expertise. We rely on smart contracts. We rely on the Aave protocol. So there's a lot that we can actually build and win at the same time.
Yeah, man. Aave will win. Stani, thanks for your time today. Congrats on the proposal. And I think that the market is absolutely begging for this from tokens, from the market at large, given just the state of prices being down, but just we are ready to kind of be seen in this more mature, sophisticated light as it pertains to valuations, comparables to traditional markets, as well as just the revenue potential for on-chain businesses and crypto-enabled businesses. So, Stani, hope this goes through. Hope everything goes well. Have a great weekend, man.
Thank you, and Aave will win.
Aave will
Cheers,
win.
man.
Thanks for coming on.
Cheers.
See you, Stani.